Sa preferred shares, kung hindi ka nabigyan ng dividends this year, it could be accrued for the next year, meaning dividends mo na dapat entitled for you this year and then next year is a better year, you could still get them next year with the inclusion of the dividends that you were entitled to also for the next year. If you are older, go for this. If you don't like volatility, go for preferred shares. So this is boring, but this is passive income for life. This is cash flow. Hey guys, so this is a follow-up video on the video that I created talking about dividends in times of uncertainty. And a lot of you from that video wanted me to talk about preferred shares, and that's what we're gonna double down on this video. Let's talk about preferred shares and my strategy towards it. So please do note that preferred shares was not one of the first investments that I got into. In fact, when I was younger, hindi ko masyado gusto yung preferred shares. I didn't want it because it didn't give me capital appreciation for the long term. As I got older, as what I've mentioned in a lot of the videos that I created, I started to dabble down into investments, paper assets that gave me cash flow. And part of that also, similar to the previous videos, common shares that gave me a large amount of dividends. But the difference between common shares kasi is if you know what you're getting into, it's not just that it will give you dividends, it's also that it could give you capital appreciation as well. To give you a greater insight on preferred shares, let me backtrack a bit and talk about bonds. And let me backtrack a bit and talk about what's the reason why companies go into the bond market and what's the reason also why they go into the preferred share. Companies go into bonds, companies go into preferred shares because they want to raise money. Raise money for whatever reason they seem fit, either to pay off more debt or because rates right now are lower, they could borrow now at a lower rate to be able to pay debt that had higher interest rates as well. Or in essence, they just want to use the money to take advantage of certain opportunities that will help take the business further, or they want to use it also for expansion. So the difference between a bond, and if you've been watching a lot of my other videos, Ayala, SM, Petron, San Miguel, 899 Holdings, Phoenix Petroleum, a bond essentially is them borrowing money from all of us. You give your 50,000 pesos, you give your 100,000, you give your 1 million, you give your 10 million to them. And if the bond is 5 years, 7 years, 10 years, for that entire duration, you are lending your money to them. That being said also, because it's borrowing, they will pay you an interest rate. So it could be 5, 6, 7, 8, or it could be lower than 5% also. 4% for 10 years, that means for the next 10 years, you get 4% of kung ano man yung linagay mo. So if you place 1 million pesos, you're gonna get 4% of that, which is 40,000 less 20% withholding tax for the next 10 years. And essentially, they're gonna pay you that, and at the end of the 10-year duration, you get your money back. The only difference between bonds and preferred shares is what I've mentioned. You are not lending money to that company, but since it's a preferred share, you are being a part owner, similar to buying a common stock, similar to buying a common share. When you buy a common stock of Globe, when you buy a common stock of Ayala, you become a shareholder of Globe and Ayala. In the same way, should Globe and Ayala offer a preferred share, you become a part owner, a shareholder of both Globe and Ayala. The thing though is this, the inherent difference for preferred share is there's an offered dividend payout for investors. So please remember, when it's a bond, yung makukuha mo is interest kasi utang yon. For preferred shares, you are paid a dividend. And please remember, pag utang, kailangan bayaran. Pag dividend, galing siya sa kita. If you are buying preferred shares, you also need to know what the fundamentals are. You need to know their capacity to earn, because their capacity to earn also predicates them giving you dividends. Because it's a stock versus a bond, normally the dividends, or at least the dividend yield that you would get from preferred shares, should be higher than what they are giving out as a corporate bond. So please remember, there's greater risk for preferred shares as compared to corporate bonds, because ultimately kailangan bayaran yung dividends. Pwedeng kung pangit yung taon, then they may not be able to give out dividends. Sa common shares kasi, similar to what we've seen last year, no? If pangit yung taon, pangit yung kita, they can slash dividends and you get nothing for the year. And that's the underlying difference sa common shares. Sa preferred shares, kung hindi ka nabigyan ng dividends this year, it could be accrued for the next year, meaning dividends mo na dapat entitled for you this year and then next year is a better year, you could still get them next year with the inclusion of the dividends that you were entitled to also for the next year. So, makukuha mo pa rin siya. I think that's one of the biggest differences and the biggest advantages of preferred shares. I mentioned kanina sa bonds, yung taxes, withholding taxes around 20%. Sa preferred shares, yung withholding taxes only 10%. Again, MP2 beats all of this because no taxes for MP2. But head-to-head, no, kung bibili rin kayo ng, for example, Ayala Corp bond versus Ayala Corp preferred shares, then if you know how to analyze Ayala as a company also, and then you understand the risk and the rewards, it might be more prudent also to go the preferred share route because the tax benefits are better. And assuming that alam mo yung company na binili mo, tapos bumibili ka naman talaga ng common share ng stock which is at a higher risk than preferred shares, then it might be better also to go the preferred share route if you want something that's safer. Similar to a bond, no, with the exception na perpetual yung preferred share, there are some preferred shares na merong tenure. Parang bond, given X amount of years, after a period of time, they would return the money back to you or they will remove that particular position from your portfolio, which is normal. So, meron 5 years, 7 years, 10 years, meron talaga perpetual also. There are also instances no, where part of the deal is they can call it back at a certain point at the X number of years. As long as it's under the option that it could be called back, they would call it back and they would give you your capital. Common shares, you can hold on to it forever. And then as long as nagbibigay ng dividends yan sa'yo, you get something that's giving you perpetual returns on a regular basis plus meron ka pang capital appreciation. May mga nagtatanong bakit may mga preferred shares na umakit yung presyo. When that's the instance and you sell it, you can make money also off of it because it's a stock, no? That's also a possible narrative that you could trade preferred shares, buying it when the price is lower, taking profits when it goes higher also. Pero every time you sell it, then you won't be able to get any more the returns from the dividends. So, but what I normally do is I just hold it up until the preferred share is either called back or tapos na talaga yung tenure niya. This is just really passive income for life. This is really you getting specific returns that are higher than bonds, higher than most common shares, and then you can hold on to it. And this is my rental income, this is my cash flow, this is something that I can get on a regular basis that can give me a specific return. So I think the last one that I got was I think 899 Holdings as a preferred share. Then I also got Phoenix Petroleum, I also got Megawide. Then over the years also meron mga dollar denominated from Del Monte to Certec. The older ones that I've gotten, I think it was San Miguel, Petron, Ayala. I've been getting a lot over a course of time and I've been just trying to stack them, spread across different platforms, or if you have a dividend portfolio, you can put everything there also. Please do note, no, this gave me bits of stability also because alam ko that when the markets crashed last year, my dividend portfolio, common shares with dividends plus preferred shares, gave me a rationale that I could get a specific amount of return no matter what would happen. And I knew that as long as the companies would perform well, I would also get my return. So this is boring, but this is passive income for life. This is cash flow. If you are older, go for this. If you don't like volatility, go for preferred shares. You have portfolios for trading or for capital appreciation or for investing that are growth. Once it starts making more money and then medyo kinakabahan ka na sa size nun, take out some of it, take profits on some of it, and then transfer them to stocks that will give you preferred shares. So again, nagbabago din naman yung rates na binibigay nila, no? In this era where interest rates are lower, you could expect that what they will offer to you na dividend yield would also be lower. But on the ones that I got before, I think meron pa doon mga 7-8+% also. So, may mga common shares kasi na deep yung corrections. Sobrang lakas ng mga drops nila. Na pag sobrang lakas yung drops, and then you buy them and you pick them up while they are very, very low, your dividend yield becomes higher. For this one, may mga drops also, and when you pick it up, you get to have a higher return, but you won't see a lot of drops here. So, it gives you stability. Pero because of its stability also, it removes the option na pwede kang magkaroon ng mas mataas na dividend yield kung magkakaroon ng malakas na bagsak. Less volatility, stability, passive income for life, lesser taxes, cash flow, and it's a good way for you to siphon off your earnings. What are the things that I look at? Yung nagbibigay sa akin ng cash flow. Of course, REITs are there, common shares that are high dividend yields. Then you have your preferred shares that you can add to the list. So maganda lang din minsan for some common shares is that pag umakyat yung stock price, kahit mababa yung dividends niya, over the course of time, the dividends start to increase kasi sinusundan niya yung capital appreciation, sinusundan niya yung pagtaas ng stock price. A lot of the stocks na common na matataas yung dividend yields niya, minsan hindi na siya masyado nagkakaroon ng capital appreciation. Advantage ng common shares na nagkakaroon ng capital appreciation is kahit mababa siya, pero you hold it for 10-15 years, the dividend yield of that on your first purchases should be very, 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 very high, assuming that the company that you're buying is very, very good and very, very consistent sa dividends nila. So aside from those three, you have your bonds. I have corporate bonds and I also have retail treasury bonds. Then aside from that also, you have your bank products. I've been adding a lot of digital banks also because matataas yung interest rates nila. Then there's a lot of bank products from IMAs and LTNCDs that I've been using also that have been giving me fixed interest rates over a specific period of time. Other than that, I've been trying this more and more. A lot of the cryptocurrencies have been giving savings pools, savings plans, and also staking, but those also give you regular cash flows on a regular basis. So that's how I've been building my passive income. That's how I've been building my cash flow stream. So please remember, if you watched the previous video talking about my portfolio, this is separate from my growth portfolio. This is primarily focused on things that would give me cash flow, things that would give me predictability. And ganun lang yung pwede nyo gawin. Pwede nyo kumpitin, okay, sige, if they're earning say 6% per year, if you have 10 million pesos, 6% at 10 million would give you 600,000 pesos a year in perpetuity, as long as you transfer it pag nag-expire yung mga bonds or preferred shares ninyo. Or if you have 20 million, it would be 1.2 million pesos earning at 6% on a regular basis. So you just have to work backwards. How much is a yearly amount that you would want to get from bonds, from preferred shares, from your common shares na nagbibigay ng dividends and your REITs, etc. Add them all up. How much would you want to get from that? And then total them. And then look at magkano yung kailangan mong punuin na pera. And that's what you either save up for, that's what you invest for, that's what when your businesses are starting to earn, you just pile up on that. So this is an alternative way if you are not the type of person na gusto mo mag-real estate. To get to 20 million naman, you could buy 4 condos na tigpa 5 million or 2 condos na tigpa 10 million and then parenta mo siya and you could get almost the same effect. Yung difference nga lang is you'll be a landlord, may tenant ka, you work with brokers, you have to fix the unit, kung may problema, you have to also take care of that. Plus, the fact that it's not as liquid, meaning kung gusto mong i-dispose, kailangan mo yung pera, it will be relatively harder to dispose something that's considered real estate. Those are the advantages and that's why I am a big fan of paper assets because of its liquidity, because sobrang dali niyang ibenta kung kailan ko siya gustong ibenta. So there, I hope you guys got a lot from this and I hope that this is something that was insightful and this is something that is helping you to be able to analyze and trade the markets, and you get bits and pieces of my rationale and my technique on how I analyze the market and how I analyze stocks as well. So in the description below are all of my online courses for those who want to join me, as where I do a deep dive on technical analysis, and for those who want to consume my content via book format, we have links below also for the books that I have via Shopee, and now we are also in Lazada as well for those who want to order via Lazada. Above and beyond that, we have tons of free videos via YouTube, over 1,000 videos aimed to help you trade the markets with confidence. So if you're new to this, appreciate it if you could click the subscribe button so you get updated every time I have new videos, and click the bell so you get updated every time it comes out. And if this video gave value to you, super appreciate it if you could share this to your friends, and not just that, hit the like button. So what did you learn from this? Do you like preferred shares? Is this something that appeals to you, or is it something that doesn't appeal to you as much? Let me know in the comment section, and if you guys have other questions about this, put it down. Then similar to what I did here, we're gonna make another video for all of you. So this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.